Good morning, everyone, and a warm welcome to S-Bank's Q1 result presentation. My name is Hanna Porkka. I'm the Deputy CEO of the bank and also heading the Wealth Management Division. And with me, our long-term CFO, Mr. Mika Heikkilä. Please feel free to post questions at any time you might have during our presentation in the chat, and we will then address the questions after the presentation. It is a privilege to be able to present you a result like this. Our result was 2.5 times higher than that of the Q1 last year. The improvement in our result was mainly driven by the increased net interest income. April 27th, we published some preliminary information of the Q1 result, and at the same time, we also raised our outlook for the entire year. Our new estimate for this year is that we will almost double the result that we reached last year, and the previously guidance for this year was that we will increase the result by more than 50%. So it's a substantial increase in the outlook, but of course, as always, the outlook is subject to uncertainties that might arise in the environment and in the financial markets. Customer demand for our products and services was very strong. Lending increased by 8%. AUM is at the previous level, at the previous year's level. Total income increased by 60% in Q1, and the cost-income ratio decreased to 0.69. Our rating from S&P is remained BBB with a stable outlook. You might recall from previous calls that we have a strategic goal of 1 million active clients. We progressed towards this goal also nicely during Q1 this year. We had over 600,000 active clients compared to around 544,000 at the end of March last year. Capital adequacy increased to a strong level of 16.8 from previous year's levels of 15.7. Sorry, it increased to 16.8 from previous year's levels of 15.7. And then some highlights from our banking division. The total euro amount of purchases made with our Visa card grew by 25.5%, and the number of purchases grew by 27.1% compared to the previous year. So a significant increase both in the euro amounts and the amount of purchases and transactions. Our housing loan volumes grew by over 8%, which is almost 14 times the growth of the market. For wealth management, the Q1 was a challenging one, much more challenging than what it was last year. We saw net outflows of 8 million euros, mainly due to redemptions in our alternative funds, especially in real estate. The number of unit holders in our funds grew by 5% to around 367,000. Then a summary of our key figures. Our balance sheet is 9 billion euros. The operating profit I mentioned already. Our very strong customer base is 3.2 million clients, out of which over 600,000 are active, which means they are using us as their primary bank. 2.3 million online banking IDs, 2.8 million international payment cards, which means Visa cards, and we have almost 100 different kind of branches, ranging from private banking to moving mobile branches that are something in Finland we saw in the 70s in groceries. We had these kind of vans circulating certain areas without grocery stores, and we had invented that again but now for banking. It was called myymäläauto in the 70s. For the Finnish-speaking clientele might recognize this one. On this side, a few words about our competitive position. We have been growing in many business areas faster than the market, and we are aiming to continue with a very strong growth. What makes us then different from our competitors? We have free daily banking services, which means that our clients don't pay monthly fees for their banking account, Visa card, or online banking IDs. We are part of S Group's wide and well appreciated loyalty program. Our mobile app is becoming more and more popular. We have over 250 million logins per year, which means over 1 million logins per working day. This is a number that always keeps on impressing me. We have a strong focus on ESG, and our brand is very strong according to the latest studies. We have access to 3.2 million clients who are increasing using our products and services. We're focusing on cross-selling between our two business areas, which mean banking and wealth management. And we're also focusing on cross-selling between different product groups. We are focusing on scalable, data-driven sales. We have a competitive offering in wealth management. Our clientele reaching from small retail clients to private banking clients and the largest Finnish institutional clients. We are well positioned to take advantage of strategic opportunities in the market like M&A, as we have done during the past 16 years in the bank's history several times. Next, the recap of the financial goals, dividend policy and guidance. We are aiming in the long term over 10% per annum income growth. Ceteris paribus that the market is not moving extremely unfavorable for us. Cost-to-income ratio below 60%, return on equity above 8%, total capital ratio of at least 13.5%, and an annual dividend of annual dividend between 5 and 15% of our operating profits. Our growth is based on activating existing clients. We're focusing on expanding sales to our 3.2 million customers with increasing cross sales between business units and product units, as I described earlier. Our current growth rate is significantly above market growth in most business areas, and digital channels enable us to serve a large number of customers efficiently. And as mentioned already, 2 million customers use our mobile app quite regularly. So this was my part, and now I'm happy to hand over to Mr. Heikkilä.
Thank you. So I'm starting with our key figures. We can see here there positive, solid development. I will still emphasize that our loan to deposit ratio is 85%, which is clearly under 100%. It means that with our good deposit margins, it supports our financial performance very well at this environment. Also, I would like to emphasize that we have had a strong growth in return on equity from 2020 on. There is a clear improvement there, and we already achieved that long-term goal, which Hanna mentioned, is 8%. Then on the left-hand side, you can see the total income. So clearly the first quarter in 2023 was very strong, 80 million totally. And as Hanna told, the net interest income growth was major impact there. It was totally around 138% growth in net interest income. Also, when you compare to those full year figures, 2022, so it is a very nice start for this year, this 80 million total income. From business segments, the banking segment contributed around 87% of that total income, and the rest 13% is coming from wealth management. Also on the operating profit, we can see that this first quarter 25 million profit, it is around the same level as we did 2021 in full year. So it is also a very promising start for this year. In lending, so it was totally this 8% growth in 12 months time. We can see that both in household customers and also corporate customers, the growth is about the same size or same level. And then in the deposit base, we can see that still the household customers, the growth is developing nicely, 7% in 12 months time. On the other hand side, the corporate customers growth was minus 18%, so totally 4.3% growth. In asset under management, we can see that we are around the same level as we were in year before, and in fund capital, there is slight growth, 4.3% in 12 months time. On the other hand side, wealth management, it's minus 5.4%, so totally 0.9% growth. In our credit quality is quite stable. We can see also in the repayment holidays and payment schedules that there is no major changes in beginning of this year and also last year. So the levels are quite stable in all quarters. And then our expected and final credit losses, they were totally 5.2 million in the first quarter. It's around the same level as it was quarter before. So totally our ECL provisions they were 24.2 million at the end of March, as they were 22.5 million at the end of last year. Our non-performing loan ratio was 1%, as it was 0.9% at the end of last year. We made some management judgments provisions in this first quarter. It was totally 1.5 million, so they are included in this 5.2 million. And also in last quarter or last year, we also made these management judgments provisions. We can see on the right-hand side that the stage 3 ECL provision, there is slight increase, totally 11.5 million in first quarter. And also on the left-hand side, you can see that the stage 3 coverage ratio is a little bit slightly increasing, so it's 17.4%. In balance sheet, there is not big change compared to the last year. So the total balance sheet is 8.9 billion. On the asset side, you can see the same situation as before. So there is totally 63% of total assets are household loans. And the main reference rates for the household loans is 12 months Euribor. On the liabilities and equity sides, the main change is that the equity has increased due to the good profit. Then our own funds capital requirements, we can see on the left-hand side that the total risk exposure amount only slight increase in the first quarter. We can see that the minimum capital requirement is 12%, which corresponds 411 million euros. At the same time, the own funds are 572 million. MREL requirement is 19.8%, and our existing ratio is around 23.2%, which means clear buffer to the requirement. In capital position, on the left-hand side, you can see that the equity ratio slight increase to 6.1% at the end of first quarter, and the capital ratios, both CET1 and total capital adequacy ratio has improved in this first quarter, but also in 2021 and 2022. Our total liquidity and investment portfolio was around 1.9 billion euros at the end of March. So slight decrease from the in the first three months time. We can see under that we can see that our investment portfolio is quite small. It's only 14% of the total portfolio, and liquidity portfolio is 86%. We have a strong liquidity position. Our LCR ratio was 175% at the end of March, so there is a slight increase from last year end of last year. And also on the right-hand side, you can see that the cash in central bank is the major item in our liquidity portfolio. It's around 72% of that. So that was my last slide.
Thank you, Mika. And now we seem to have at least one question, which is S-Bank's result for Q1 was very strong. How long do you believe that this good development with the figures will continue? What could halt the development? And we can start by saying, since our bonds are publicly listed, we can't, of course, give any other guidance that we have already given on April 27th. But if there is a reason to update our guidance for this year, of course, we will do that right away. And what could halt the development is, of course, an abrupt move in the interest rates, especially if the interest rates would, for some reason, fall towards zero or even in the negative territory.
That's right.
Do you have some other bad scenarios you would like to point out to this question? What could halt our development?
Of course, there are lots of uncertainty in the total environment, and we still have the war in Europe, and also there is some kind of banking crisis also in the United States. So of course there are also things what can happen, and it's not so easy to forecast at the moment. Of course, what is the future?
There are many risk factors in the markets, and with my colleagues, we often discuss that during the 30 years I've been in this financial field, I've never seen a market like this where there are so many uncertainties that could cause some problems. But now we must knock on wood and say for now everything is very good with S-Bank. I'm just checking if there are some other questions. Apparently not. So thank you all for participating, and we look forward to seeing you back next time. And if you have any kind of questions, feel free to contact us through the communications department, where you can see the email in the chat. So thank you everyone, and have a good day.
Thank you.